Welcome back to another PCMI Coffee Chat. If you are here for the first time, my name is Lindsay Lehr. I'm the Managing Director of PCMI. You may also know us as AMI. PCMI is our new brand launched in December of 2022. So just continuing to repeat that so everyone becomes familiarized. And we run these coffee chats every 2 weeks. This is our 4th year running. So welcome if this is your first time here. The objective of this time is to have a space for open dialogue around various trends impacting the payments industry in Latin America and beyond. So welcome. We have many familiar faces here today and some new folks. We're thrilled you're here, and we have some great content for you today. So if we move ahead, just a couple of guidelines to ensure a successful session today. This is not a typical webinar, as most of you know. If we go ahead. This is an open conversation. So we would love for you to have your mic open, your cameras on. We want to know who you are. We invite you to participate actively with questions and comments. That's what makes these events unique and special, is your opinions and your input, so that we can really have an interactive conversation. We have some content, some very new and exciting content to share, and we'd love to hear how it's landing with you. If you have questions, if you have your own perspective you'd like to share. So we can make this a really exciting conversation today. Okay, so moving ahead, I'm so pleased to welcome Thiago Dias, long-standing friend and partner of PCMI. Welcome, Thiago. So glad you're here.
Thank you, Lindsay. Thanks for having me here today.
And just give us some background, Thiago. You know, you've been in a very exciting role since I've known you. Tell us a little bit of what you do at MasterCard and what you take care of.
So I have the privilege to lead the fintech enablers and crypto ecosystem for Latin America, basically running the strategy and the relationship with the top fintechs across the region. Enablers, we call them enablers, the processors being sponsors, passive issuers, and all the tech enablers across the region. And more recently, since last year, also covering the relationship with all the crypto players. So it's quite a always on and always fun type of job, right?
Always learning, always on the cutting edge. So that's why we're so happy to talk with you today. And we're also, I just want to call out Ignacio Carvalho on our team, who was instrumental in the content that we're going to present today, leader of the research we're going to be presenting. He's not here at the moment. Many of you know he has relocated to Australia, starting up, supporting us in the APAC region. So he's not going to be, he may or may not join us. It's kind of an ungodly hour for him right now. But I just wanted to call him out as the author in many ways of the research we're going to be talking about today. All right, so if we go ahead, you know, Thiago and I, what we're going to be doing today is having a conversation about a new piece of research that MasterCard has just put out and published, and actually the full results of this study are available in the MasterCard newsroom. We're going to be posting that link in the chat for you all to access. And you may remember, this is the second iteration of research we began in 2020. Mid-2020, in the midst of pandemic lockdowns, all of us were struggling and grappling to understand what the pandemic and quarantines meant for the payment system, for the payments industry, and for Latin America region. We did a study covering Brazil, Colombia, and Argentina about 5 months into the pandemic. And it was the first of its kind research looking at financial inclusion, digitization, and the impact of COVID on digital adoption acceleration in the region. And what we did this year at the end of 2022, beginning of 2023, was repeat that research. We can go ahead and look at the details. We actually expanded the research both in market coverage and in methodology, and really trying to understand, you know, since then we've learned that financial inclusion has expanded dramatically, that digitization, digital acceleration has been really impactful in almost every market in the region. We really wanted to quantify that, understand the impact of, you know, what we had all gone through in the past 3 years, and still, what are still the gaps? And so we conducted across 7 markets in the region, 25 interviews with financial service providers, and almost 3,000 interviews with consumers all across these markets. And we have some really wonderful results to share. But before that, I'd love, Thiago, if you just speak to us, why is this study important to MasterCard? Why is this topic important to you all? Why did you sponsor this study? And from a high level, what does it mean for you guys?
Sure. So financial inclusion has been a core component of MasterCard's strategy and the way we see business moving forward, right? It came in the past with Ajay Banga, our previous CEO, with doing well by doing good. It came with a tangible and public commitment on including 1 billion consumers to the financial ecosystem. And then it brings LAC to the core of this commitment, right? As we all remember, 2017-18, we had 45% of the population financially excluded or underserved. That was actually used by many of the fintechs in their pitches to talk about their target audience, right? Banking the unbanked. And for that reason, we've been monitoring closely, not only to learn, but also to share back to the broader community and all the players in the financial services ecosystem, what can be done to further accelerate financial inclusion and moving from access to engagement. I think this is one of the key finds. I don't want to anticipate that much, but I think it's one of the key findings of the study. And yeah, super important. Broader coverage, 7 markets, it's a first for us. We tend to attain to Brazil, Mexico, Argentina, and we are really happy to be able to include El Salvador, Guatemala, Peru to the study. 25 interviews in a very agnostic way. We didn't bring any specific brand for any reason. It was very open to really bring the views of executives, CEOs, founders on their strategies on driving financial inclusion and the importance of that to the overall society.
Terrific. Thank you. So let's go ahead. And I just want to remind you guys, we're going to be talking a lot. But if you have a question, raise your hand, put it in the chat, just jump in at any time so that we can get your perspectives as well. So, we'll share with you all some highlights from the study. Again, the details are in the actual PDFs, which you can access. But just a couple of high level findings here. One thing that I found was really inspiring is how much Latin America changed in the past 3 years compared to the global level. Right now, coincidentally, our study results came out in parallel a little bit with the new data published from the World Bank Findex, which actually had been delayed. They were supposed to publish their results in 2020, delayed because of the pandemic. They produced their results, and our survey results actually really nicely mirror the global results that the World Bank came out with. And we were able to have really nice comparison between Latin America and global. So, we see that the change from 2017 to 2021 in Latin America was faster than any other world region. And this just tells us, how behind the region was at the time and how much it's caught up, and how I think we've all experienced it in our own businesses, how much change has occurred. So around 75% fully financially included, not fully, but financially included in Latin America, which really means access to a digital account that you can use to make or receive payments, you can use to save money, receive wages, receive remittances, etc. So, and Thiago, I wonder if you can speak a little bit to, MasterCard, what does included, you guys are so focused and committed to financial inclusion. What does that mean for you?
Yeah, so I think one of the key outcomes of this second version or the second round of the study is that we are now at a point where we can go one step further in terms of defining financial inclusion, not only thinking about having an account or a digital account, but also what is the impact that financial services bring to people's life, right? So engagement and real use of more sophisticated services is actually something that we're going to see throughout this presentation that really create or drives prosperity to people's life, ultimately in terms of moving from access to usage. So I think this first piece is reshaping the concept of financial inclusion to change and shift our attention a little bit more to usage and impact in people's lives. Another comment that is super important here is that World Bank had a gap since 2017 because of the pandemic itself. That's why you see 4 years from 17 to 2021. And that's also why we conducted the previous study in the beginning of 2020 when COVID was really, we were basically under the full lockdown and so on. And at that time, we found a very interesting number that was the accelerated inclusion in terms of access of 40 million Latin American adults, right? At that time, the number was, super interesting. Everyone wanted to understand how and why such a big number. It was at the time basically driven by government subsidies initiatives and in combination with fintechs, so government and fintechs. And now here we see the inclusion of another, in total, more than 100 million people, right? So when you move from 55, the 45 excluded that I mentioned, to 75, that's, I think, is a materialization of how regulation, better UX, more competition, investment drove a lot of the access that we had in the last couple of years.
Awesome. And, on this right, what I think is really interesting on this right-hand chart here, we see the percent of people who have made or received a digital payment, jumping 20 percentage points in Latin America to higher than the world average in 2021. This is the World Bank data, right? And so I've been saying for a couple of years now, Latin America can no longer be considered an unbanked region, and I still hear that all the time. I hear that refrain. Sometimes our mentalities haven't caught up to this new reality. Now there are still large gaps, and we're going to get into those gaps, but we're really on par with much of the world. And so it's just an interesting shift in the narrative when we talk about the region. All right, let's go ahead. So some gaps, right? This is still looking at the Findex data from the World Bank. This data shows the unbanked adult population. So zero access, no digital account, no ability to make digital payments. And we see some interesting disparities, both at the world level and the Latin America level. And what we see in the region is mirroring what we see at the global level. So we see some gender disparity. We see disparity among income groups. That's actually the largest disparity is among income groups, and then among levels of employment. And what our study really revealed, we'll see, is gender gap, income gap, and rural-urban gap still being where future efforts around financial inclusion need to be focused.
Yeah, and to that point, Lindsay, I think we at Mastercard, we've been putting a lot of effort on tapping each one of them in different ways. Just as an example, 2 weeks ago, we announced that we reached one of our global commitments of including 25 million women entrepreneurs by 2025. We actually reached this now in 2023, really anticipating our target. Mainly driven by specific programs, collaboration with other entities, public, private partnerships, and many specific solutions that are more niched, that require some sort of personalization. That will be one of the things that we're going to cover in the end. On the poorest side, it's a key challenge that, fintechs, they've been trying to address that, and many of them are succeeding. Because when you think about poorest population, they also bring bigger challenges in terms of profitability, right? So from a private perspective, you do need to find ways of collaborating with public incentives, subsidies, and so on, as well as bigger alliances, the way we did in partnership for Central America. And we've been doing that for almost 2 years now, where we want to include 5 million consumers and 1 million PYMEs, right, the SMEs, in the financial ecosystem in the Northern Triangle. So there you need to address the challenges in very specific ways. Otherwise, it's super hard for you to monetize a business. And if you don't have the right incentives and the right monetization strategy, it just gets harder to address the needs, right?
I love that's a great point, and that speaks to a huge question mark in the industry. So if we're getting down to the last 20% of people who are achieving access. It's really hard to charge fees, right? And monetize this last mile. Is there anything specific you can share, Thiago, about specific strategies? You know, do you give up? Do you sacrifice monetization in the short term and eventually try to graduate folks higher up to adopt new business models for them later? How do you go about that?
So there are many strategies, one of them being the dematerialization of payments, something that we've been pitching and discussing for a while now, where you can have a fully digital card and a fully digital POS, right, with digital first program offered by MasterCard and the tap on phone solution. This reduces costs dramatically because the issuance of the plastic itself, it's usually a key component of cost. But then this also needs to be associated with a path to profitability. It's not to say that you charge fees in the very beginning of the relationship, but you do need to bring value to people's life, and as a consequence, more sophisticated products. But for this to be possible, you do need to also have a clear strategy on financial education, because without literacy, people will not adopt a more sophisticated service like investments or private insurance or even buy now, pay later, right? Other than that, you can put people into a trap of, having access to unresponsible credit, which is something that we don't want as an industry. So there are many different ways to address all of that.
And it's funny that you say that, because honestly, there's a lot of businesses directed at the poor, because they're a profitable segment in many ways, because they're in emergency situations, right? And so they don't always have options. Yeah. So I like what you said about, doing this in a sustainable, healthy, responsible way for the long term.
Yeah. And this stage that we are as a region today in terms of regulation and infrastructure, Lindsay, I think it brings lots of additional opportunities, right? Because in the past, we were always thinking about what we call a bank-like solution, which is one or two cash-in methods, a digital account, and one or two cash-out methods. But if you look at the value proposition of most of the successful fintechs today, they have much more than that, right? Remittances, they have other real-time payment methods, they have they pay interest on over balance, they have better access to credit. So I think all of these also brings a lot of improvement in the way the reach is going to keep pushing, right? As you well said, there is still 115 million people to be banked, and I think we are much better prepared than we were as a region 5 years ago.
Absolutely. And just to clarify a term you use, dematerialization of payments.
Yeah.
That refers to removing the hardware.
Exactly. Removing the
physical POS and removing the physical card. Okay.
Exactly. That's it.
Perfect. Cool. All right. I think this slide already helps us visualize a lot of what we're talking about, right? So this is, we talk about graduating folks up or moving people up the financial inclusion ladder. And this is a framework that we developed in conjunction with MasterCard in the 2020 study. Really trying to bring some additional nuance to the discussion, because the World Bank, which has been the fundamental tool that everyone around the world has used to measure financial inclusion, captures, do you have an account or not? And now there's many other metrics that they capture, but it's a yes or no question. And so, but of course, it's much more complex and nuanced than that. And all of us working in the region understand very well that you may have an account or you may have a prepaid card, but that by no means that you actually using it and getting value out of it. So we developed this framework to better understand the journey that folks take when when getting introduced to financial services. So this really, we start off looking at the unbanked, cash-only consumer, no usage of financial services, no account, fully a cash consumer. Moving into a cash preferrer, meaning, okay, I have at least one financial product, but I don't use it consistently. This might mean someone who receives a social benefit into a digital account or prepaid card, maybe receives their nomina or their payroll into an account, but the habitual is I extract it in cash once a month and I organize my life in cash. Only once they become willing to try, are you starting to be served? Meaning, okay, I'm curious about this. I'm willing to try it. I'm starting to make small transactions. I'm starting to make maybe a bill payment or a mobile top up or small remittances, small P2P payments. I'm starting to open myself up to the idea, starting to understand the system, starting to build trust with, and this has really been the role of fintechs in the majority of cases, digital wallets and digital accounts that are free, digital onboarding. I can open it up on my phone, and all of these transactions are free and easy for me to use. Now, we only consider you we only consider you included once you become a cash displacer, meaning you're using the features of your digital account frequently and you're starting to reduce your usage of cash. And notice only at halfway up the ladder are you really included. You're really getting value out of the system, and it's really changing it's adding enough value to you that you're changing your daily habits. And then from there, you become a true believer. Most of us in this call will be, true believers or masters, in which I prefer digital financial services over cash. I only use cash when it's absolutely necessary. And I'm starting to use more sophisticated products, credit, insurance, loans, and I'm using financial services strategically to advance my life. Any thoughts on that, Thiago?
Yeah, I think that's kind of the journey that we've been talking about, right? One thing is that you download an app, you do the KYC that is simpler and simpler by the time, right? You give your email, phone number, name, take a picture, and that's it. So the entry barriers are going down and down, but that's not enough. We saw in 2020 that some of the massive initiatives opened even 100 million accounts in Brazil. But then the challenge was people were getting the benefit and withdrawing the money, forming lines in the sucursales, right, at the branches. That all actually became a huge problem because we were in the middle of COVID. So that was a key moment to learn and understand how to create the right incentives. I think that's also one of the things that we're going to cover in the end. And what is the right set of features to be offered to each one of these segments. So when I think about if I were on the issuer side or the bank side or the fintech side, we all have our segmentation engines, right? CRM and analytics and everything. I do believe this is a very good segmentation structure to be embedded into whatever you do today, right? You may have like by income, by demographies and so on, but you also need to understand the maturity level of this consumer in terms of financial services adoption. Maybe if you start offering something super sophisticated, they will just not understand and they will move back in the ladder, right? So that's kind of the challenge that we see, but also the big opportunity we see ahead. Mm-hmm. By clearly identifying who they are, what they do, how they behave, I think we can jointly move more and more people up the ladder, right?
Can I jump in on this? I like this slide. I talk to fintech people all the time and they go, I've got this great thing, it's going to change the world. And I'm going, people, you can only take one step at a time. You can only introduce one new thing at a time. And each new thing takes a long time for people to adopt, to get used to. And here is an example. This is just doing it electronically rather than cash. And it's a process. It's going to take maybe years for people to make this one change in their life where they become comfortable with it. And so when you're going out there with a new product, you've got to look and say, how many changes am I asking people to adopt with this? And so many times it's like, well, it's a cryptocurrency and it's electronic and it's this and it's a currency you're not used to and it's this. It's like no one's going to adopt that unless there's a really, really good reason. And so I like this slide because it really shows that it does take time.
Yeah, I think you're spot on, Nick. You know, it takes time. Now, things can accelerate that timeline or not, but it takes time. And to your point, Alejandro, in the chat, you know, it takes an ecosystem, it takes a village. So I know, Thiago, that's something you're always talking about, right? Ecosystems, partnerships, right?
Yeah, it's not like one company's mission alone, right? It's almost impossible to do that. The story that I like to tell is the contactless conundrum, right? I was leading Brazil business development here back then, and we were always in this discussion. I will not replace, the acquirers were saying, I will not replace my POS with the NFC antennas because there are no cards on the street. And issuers were saying, I'm not issuing cards with the antenna because there are no POSs. So if we get stuck into this kind of conversation, we never move forward, right? And by the time we partner with all the value chain players and understood that there was a balance needed to make things happen, then this agenda will move forward. Basically in LAC, we have a really good acceptance, really good issuance and so on. And when you think about reaching, you know, the last mile, and as I see other comments here, it's about how to find the right partners, how to select the right infrastructure, how to coordinate and orchestrate the right incentives and benefits and so on, so people can gradually understand the real value of a specific solution. I like mentioning players like Rocket POS, Payphone in Ecuador, where they go to the mom and pop shops and the tiendas, and you know, it's a one-by-one educational effort. But when the thing gets traction, then you see magic happening. To Nick's comment, right? The purpose of this ladder is exactly not to, you know, anticipate consumer behavior. Otherwise, you can push too much. There is another slight component that is the new generations, right? I always like to use my kids as examples, like my daughter Mariana and my son Eduardo. They don't even understand what is the use of efectivo, right? They don't even understand that. They are like, every time we talk about, you know, and they are 10 years old, right? 10 and 9. So every time we talk about finance, they immediately think about an app and a card that is digital, and then you just, you know, touch and so on. So I think there will be also the addition of these new waves and these new generations that they are cash displacers by default, right? So we will see a balance between the excluded and the natives, right?
That's funny. We talk about digital natives, right?
Exactly.
And we're talking about cash displacer natives. So, which kind of go hand in hand. So
yeah, exactly. There's another interesting aspect to this, that when there is an outside pressure or problem, it can accelerate it. And COVID has been that. That has disrupted people to the point where they are open to things that would normally have taken a decade, maybe, for them to be open to. And so we're in a position of, in a way, taking advantage of that, but in another way of, well, no, we've been forced into doing something about this because it's an issue. So you do get outside influences that speed that up, which is one of the very few silver linings of COVID, is that it's led electronic and financial inclusion.
Well, let's go on that note. Let's look at some numbers here. On the next slide, we actually see this ladder quantified. And I think
that's the best one.
This might be the most impactful slide, right? So we can see how the population has moved across this ladder. And so pre-COVID, right? Early 2020, all the way to the left here, this is the distribution of the population across these groups, noticing that 45% of the population was a cash-only consumer. All right. Now, at that time, I remember saying, wow, over 50% of the region is included, right? It was a big milestone even to get to that halfway point, but 45% still fully cash. And this is why the entire ecosystem was focusing on digitizing cash. Now look at that gray line and how drastically it has declined from 45% to today, 21%. This is now according to our results. Remember, the World Bank was 25%. Our number came out to be 21%. So very, very similar results there. But between 20 to 25 people, 25% of adults, down from 45%. So I mean that is where we see our 100 million people moving into the financial system in the span of really 30 months maybe. We also see we also see willing to try category around 10% willing to try pre-COVID, moving up to 35%. So that's a big 1/3 of Latin Americans are now experimenting. That doesn't mean they're fully included, right? There's still a lot of work to be done to make them feel comfortable and really start to perceive the value of financial services, but they're in the system and we can access them through a variety of strategies to get them more comfortable and consolidate their use. Cash displacer has moved from 9% up to 16%. We see gains in true believer. Master stayed about the same, right? Once you're at that level, you're not going to go up, you're not going to go down. But we see massive change in the bottom of the pyramid, really moving into the middle of the pyramid. And now fintechs, banks, all financial service providers have a much larger addressable market to experiment, to try new things, to try different business models, new monetization strategies. There's a much bigger pie for everyone. And that's what everyone has been working on over the past decade, is really expanding the pie for everyone.
Exactly. And that's one of the biggest opportunities, right? When you think it's kind of easy to assume how did we get to these numbers? Because if you think about the last 5 years, let's get some rough big numbers and all of them public. Nubank reaching 80 million customers, C6 25 million, Voila close to 10 million, Inter and Original 15 to 20 million each, PicPay 70 million users. So again, the barrier to open an account, to download the app or open an account, I think it's kind of given. That's why I want to reinforce again the message is we now have 100 million people that became banked according to the World Bank concept, and 110 million became willing to try digital financial services. That's where the opportunity is. That's where partnerships should be leading us to. How do we get these new people that are already with a bank account or a digital account or a digital wallet, and how do we help them move up the ladder step by step with the right and personalized educational content in a way that financial inclusion plays its key role, right? Because it should ultimately be about helping consumers envision the life they want, and at the same time, providing the financial tools needed to make it happen. If we are not doing this, we're getting it wrong, right? As an industry. So the opportunity is there. There are still challenges, but I think we are living a very unique moment with, again, infrastructure, regulation, better UX than ever before, nascent technologies as AI, new technologies reducing costs substantially. I think it's a very powerful moment that we are seeing in front of us.
Thiago, just one quick question.
Yeah, sure.
When I start looking at the information before on the previous pages, I would bet that the master percentage would increase a lot from pre-COVID to post-COVID, but I can see here that it remains stable. What we are doing wrong, that we are not mastering more people and become really active and really positive on that topic, no? What should we do more?
Yeah, I think it's the next round, right? What we would expect is 1-2 years from now, we would see this going up. As most of the efforts are today on moving the base of the pyramid inside the financial ecosystem, that's why we see cash displacer and true believer moving so much. I think we are one step behind of mastering more people. Again, if you think about the more sophisticated products, Bolsa de Valores, how many people are inside Bolsa de Valores, right? Crypto, how many people are actually using crypto in the day-to-day? We're going to see, I'm not sure if there is a slide about that, but it's 21%. But are they using with full understanding in the day-to-day and so on? Are they getting insurance? Are they getting other credit products? I think that's where we are in the inflection point to move true believers, cash prefers to master. And that we should see in the next ones.
That's a great question, Ruben. And another point is that the innovation we've seen has really been focused on the middle and bottom of the pyramid, because that's been perceived as the big opportunity. You know, most startups, most fintechs, even most bank innovations have been focused on the bottom of the pyramid. So it's logical that that's where we're seeing the difference. Great question, Olivier. His question is this consistent across all countries? This is an aggregation of the data, of the regional data. So this general progress is consistent across all markets. The numbers are going to vary. And of course, Brazil, Mexico, Colombia, Argentina, the largest populations where we see the most progress, are going to be a little bit overrepresented in these numbers compared to Guatemala or Peru, where we see a little bit lower levels of digitization. So great question. And it's great to point out that this massive and positive progress is not necessarily consistent across every region. Of course, Central America has a long way to go. Although we still see the same trend occurring across every market.
Exactly. And we can see, like, again, from my selfish perspective on the fintech and enablers, right? I had the privilege to visit Panama, Guatemala, El Salvador, Peru, Ecuador. I went to Ecuador to launch the first fintech that was issuing cards in the country ever. And one thing that is really interesting to see is whenever I go to Mexico, Colombia, whatever, I can clearly see that they are just in different stages from a timeline perspective, because by the time you start to see the fintech associations, the regulation, the investments coming with more visibility, the entrepreneurs being more incentivized to create new technologies and value propositions, you can easily think that this will be a gap that will be closed at some point in the future. Even the enablers, if you think about processors and being sponsors, 4 years ago when I started this position, we had a heat map, and there was like Brazil and Mexico, and maybe 2 or 3 in Argentina. Now we have players in Panama, in Costa Rica, in the whole Central America, PCA, Norte Triangle, and so on. And again, this is to make it easier for players to come in and to innovate, right?
Awesome. So let's go ahead. One question I wanted to ask, Thiago, is, you mentioned, the next steps being having to kind of go segment by segment, really personalized. Of course, the last mile is always the most difficult and the least profitable. That's just the nature of the beast. So, and we're also at a very unique moment in which venture capital has dried up a little bit for fintech. Many startups are struggling. Budgets all over the industry are restricted. So what are your predictions, or kind of, can you talk about the need to kind of invest and make long-term commitments, but at the same time, we're in a much less cash flush environment?
Yeah, cash is drying and it's more expensive than ever, right? So I think it's a process that we got to go through. We monitor the fintech space closely. We work with many partners to have a full understanding of what's happening. Death rates are higher than ever. We all see the news about layoffs and bankruptcies and so on. But this will drive consolidation. will help the strong and robust businesses to succeed. And what I usually say, and I posted something on LinkedIn the other day, is that we're going to get to the other side of the tunnel that is light there, but much stronger than we were 2 years ago. The high valuations and the way even the calculations were done in the past were kind of the way financial inclusion is measured. Like if you have an account, done, check, and you are included. The VCs were even calculating, running valuations based on downloads that, at some point, it creates a lot of intrinsic risks. And I think everyone is getting more responsible around all of that, force it to be more strict, but it's good for the ones that have a strong business. And what we believe there will be maybe less companies, but stronger than ever.
Terrific. Okay, so here we can kind of see some more detail from the study, right? Access to financial products and services, digital account and debit card being the primary instruments that people first go to. And here now we're starting to kind of get some of the learnings from the research, right? So digital account and debit card, right? Key to unlocking access, key first step products across the board in every market. It's reasonable and makes sense. It's interesting that account and debit card are both. It's not just account, it's account and debit card are equally have equal penetration and an equal impact on financial inclusion here. And then, 20% of respondents opened their first savings product during the pandemic, just again speaks to, how impactful that time period was, and 15% as a result of a government subsidy. And here we start looking at the importance of public-private partnerships and the role of the government in reaching this last mile. And from our last study, we saw markets that had aggressive public assistance programs combined with fintechs and banks had huge improvements in financial inclusion compared to those that did not. So starting to pull some of the lessons to replicate, right, going forward.
Exactly. So orchestrating partnerships that brings all the pieces of the puzzle is key. Just one highlight in the chart, you see prepaid card as well. So I would say it's a combination of debit card and prepaid card. Prepaid card has been growing like 3-4 times faster than any other card in terms of number of cards and volume, basically driven by the fintechs. In most of the countries, debit is only for financial institutions. Then you can see that there is a good combination of instruments as a cash out option, because there is one thing that is really important. People will keep their balance inside a digital environment in the same proportion as they trust they can take the money out in an affordable price at any time. And that's one of the key things of the financial inclusion triangle, that the way we see, we discussed it a lot about innovation, inclusion itself, but trust is another core component of that. And to your point, governments are always seen as a component of trust, not only of social support, but as trust, right? And that's why government subsidies are key. Public transportation acceptance enablement is also a big trend that we see. And to Pedro's question on regulation, I would say overall, it's affecting positively. There are different flavors across LAC, but mostly, I would say in 4 areas, right? Fintech laws, open finance laws, crypto laws, and crypto, open finance, fintech laws, crowdfunding laws. They are all moving in some flavor, in different paces, different levels of maturity, but they are all moving along. And this brings lots of opportunities to innovators, right? And lastly, on the other products, to Ruben's question, right? You see loan or line of credit, private insurance, then general investment. This is growing, and I think this will impact the master in the future, right? People are getting ready to move from one segment to the other and to increase the master. And that's where I believe people will start to actually see the broader impact of financial services, right? With affordable products, with affordable services that to some extent improve the way they live their lives.
Perfect. Let's go ahead. I just want to make a comment that it's funny, you know, you mentioned that government inspires trust, right? And, you know, one of the biggest fears is that my money is going to disappear, right? And if it's backed by the government, or if it's banked by a bank, like a well-known traditional financial institution, there's a lot more trust. It's funny because government and banks are two of the most hated institutions globally, but they're also the most trusted, funnily enough.
Exactly.
So,
and again, not talking about the political side, one or the other, but as an institution, I think that is this power of driving overall perception of trust. That's why this is a core component for MasterCard as well, right? So whenever we talk about network payments, transactions, we talk about it must be simple, secure, and smart to some extent, right? That's what people want.
Yes.
You to, they want to make sure that whenever they initiate a transaction, everything that needs to happen in the back will happen, right? In a safe way. So I think that's an important component of that. And to your point, financial institutions, we do have this long-term perception of trust, but all the studies and the new researches are showing that people also trust in fintech brands. Why? Because the ones that are driving the huge amount of financial inclusion are becoming robust brands. Some of them having more customers than traditional financial institutions, right? There are many studies that point that 50% of the population that is banked have two accounts, one in a fintech institution and one in a financial institution, right? So at a bank. So I think this is also remarkable to see happening in our.
And it's, you know, it's been now more than 10 years that fintechs have really been gaining traction. So to your point, Nick, you know, it takes time, and we're at the decade mark now that some of these brands have been around and they haven't gone anywhere, and there haven't been any crises, and they haven't lost their money, and they know many other people using them. So
yeah.
Cool. Okay, so looking at cash reduction, right? I think here's some other really interesting stats. So among survey respondents who claim that they use cash for 75 to 100% of monthly expenses, right? This went from 25% of the population down to 15. Yet again, another indication that cash is really losing its predominant role for many citizens. Now, cash is still cash is still the #1 most frequently used payment method. Okay, but the volumes of cash have gone down, and the number of people 100% dependent on cash have really gone down. So cash is still there. There's still a lot of opportunity to now penetrate the share of wallet. I think that's the next opportunity, right? We keep saying access has been established for most people. Now it's about increasing value so that people use their accounts more often for more different types of use cases, creating those niche and nuanced products that are a product market match for whatever type of payment people are making. And exactly. Mobile payments, right? That goes to the importance of mobile payments. Hugely important. 88% have used a mobile payment to make a transaction, with 81% of that being P2P. So again, P2P being this huge gateway, some of the most basic transactions you need to make, especially during the pandemic, P2P. And we've seen a complete revolution of P2P payments. And so just further evidence that this is a completely gateway product.
Yeah, and there are many initiatives in that sense, right? So if you think about mobile payments, in Brazil, for example, we launched WhatsApp Pay. That is actually the best UX possible for one to send money to someone else. On purchase on the internet, we recently launched online debit to once and for all enable debit acceptance in e-commerce. That was a challenge for the industry. So I think there are many scalable initiatives that are happening to actually tap this mobile payment opportunity while understanding how to capture the reduction of cash. Again, if you are willing to try, you may not be putting all your money in a digital mean, right? You are testing, you are checking the value that this solution adds to your life, and then moving gradually to fully digital. So this reduction is relevant, but there is still a long way to go.
And to that, let's go to the next slide where we can kind of see really the gap, right? So we're celebrating, right? These are great results, but there's also still 21% of consumers are unbanked, and a disproportionately high number of them are women, low-income consumers, and people living in rural areas. So this is the last mile we're talking about. And I see kind of an interesting side conversation going on. If anyone wants to jump in with their theories or comments or recommendations, that's welcome, or things they've seen in their own markets. Main success factors, we've touched on them already, but affordability, of course, especially when dealing with a low income environment. Time, the biggest value that financial services can bring to you, especially at early stages, is time saving, right? I'm maybe a lower income consumer. Time is my biggest resource. So if I can save time, I'm going to value time, which is very often tantamount to convenience, right? P2P, social benefits, and interoperability, kind of what you said to your point a little bit earlier, Thiago, about being able to withdraw money at any time, anywhere. Similarly, being able to make a payment anytime, anywhere, to anyone. We all know how important interoperability is at someone understanding of a product adding value to their life. Pedro asks, security of not having cash. I'm sure this is definitely valuable to some segments, right? Especially, we were just, our whole company was just in Argentina. And it's amazing the quantity of cash you have to carry around to make any type of meaningful payment or purchase. So security of cash, the convenience of not having to carry cash is definitely a factor for many. Okay, and if we kind of go to the next slide, this slide goes into much more detail in the paper. I'd love for you guys to take a look, but some gaps, right, that we still see. As we've said, access has been established. To your point, Ruben, getting up into those upper echelons is really where there's opportunity, and access to credit for all levels of the financial inclusion ladder is what we think is the next big thing, the next benchmark and barometer for financial inclusion. Okay, you have access to an account. That's very basic. But am I accessing instruments that allow me flexibility and the ability to expand my purchasing power? And credit in its many formats is really, in our minds, a huge opportunity.
Yeah, and Lindsay, to this point, think about opening a bank account 15 years ago. Right? It was a process on paper, signatures, go to the branch, come back and open and wait a couple of days and so on. How does it work today? What is the real marginal incremental cost of opening a new account today? It's small. Credit has to go through the same transformation. And it's going through, right? Why big institutions are not touching small ticket credit lines? Because the intrinsic cost of one operation is usually high. So it's hard for you to lend small tickets. And that's how you enter the financially excluded, right? Because you also need to be responsible in the way you drive your credit policies. So I think technology, regulation, the new types of entities like SCDs in Brazil and many others across the region will also help this to be accelerated. And for sure, it's the biggest opportunity that we see. That's why in the lessons you see centered product development on credit, right?
Perfect. And, in some of the markets that are for this last 21%, especially some of the markets that are a little bit behind, right? What have we learned about the markets that have done really well? There's still a lack of education, and UX barriers are still existent in some countries. This speaks to regulation. This speaks to digital onboarding, the ability of fintechs to provide digital accounts and custodia of funds. Savings and payments products have had the greatest impact. Savings, debit cards, P2P payments are the first steps. So when we're looking at Central America, Guatemala, even Peru, which has made huge progress, but there's still progress to be made. And the study did not go in depth into acceptance. There is a section on among our consumers, around 20% of them actually claim to be microempresarios. So that's a phenomenal finding in and of itself. And building that other end of the ecosystem and how entrepreneurs and SMEs, especially during the pandemic, when a lot of people lost their jobs or were laid off, or people had to get creative, and stimulating demand and access from the acceptance side is equally as crucial.
And this is kind of touching what Pedro was mentioning here, right? Cash in, cash out, because it's a wheel of digitalization, right? Because by the time you as a micro entrepreneur or a small business start accepting cards or digital payments as a whole, you start to get your receivables cashed into your digital wallet. By the time payroll solutions start to be fully digitized, again, so I think the more you drag the flows to be deposited directly in a digital container, the more or the less cash in and cash out in efectivo in the tiendas will be needed, right? So at some point there will be a balance on this. Yeah, we saw lots of acquirers, PagSeguro, Mercado Pago, Stone, where the digitization that they drove is amazing, because people started to use a maquininha, and this became their inflow of money, right? Almost like their salarios or their ingresos, and it's digital by design. So I think this combination of subsidies, payroll, and acceptance is also a key component of accelerating inclusion.
Perfect. I think we have one more slide just as we wrap up, which is just to, double down on the fact that we've got, almost 100 million, around 100 million people that are still unbanked. So there's still work to be done. There's still partnerships to be made. There's still new strategies and business models to be experimented with. And I think, that's a big reason why you're here today, Thiago, to inspire and encourage and be available for those who are wanting to go after this segment. And hopefully, inspire us all to celebrate the work that's been done and continue efforting on.
Great. It was a great opportunity, not only to run this study with you, Lindsay, and Nacho, amazing academic guy, did a really good job, but also to invite you all to download the paper. I think it's 64 pages total, lots of good insights and content, and also to keep in touch, right? I think it's a community that we are always trying to build, to enhance, with the end goal of including more and more people. Thank you.
Terrific. So thank you, Thiago, so much for your time and sharing with us. And just everyone, keep your eyes out. We will be holding 2 webinars on this, both in Spanish and Portuguese. And we'll be hearing from some of the fintechs and financial institutions that participated in the study. So you can get another layer of insight actually from the operators in the region. So keep your eyes open for those announcements coming soon. And if there's no more questions or comments, thank you everyone for joining us. We'll be back in 2 weeks. So keep your eyes out, and great to see you all. Thank you all so much.
Thank you.